Right. Let's talk about it, people. Um, just popping on real quick to talk about what's going on in the market. Let's see here. Mm, just gonna share out these links real quick, if y'all don't mind. We are here, by the way. We are here. We are here. All right. Um, what's going on in the market right now? Today, we are looking at this value area low. Let me see what happens if I go a little closer in. All right, there we go. Right there. So this right here is our, you know, um, proving point. All right, this is our proving point in the market right here. Anisha, what's going on, guys? What's going on? What's going on? So yeah, this is our proving point right here. As we can see, so we actually have two things going on here. So we do have so I'm going with the 20 and the 50 MA right now. All right. Don't mind this. Going with the 20 and the 20 and the 40 MA, I meant to say 20 and the 40. So as you can see, the let me go over here really quickly. I'm just gonna move this for a quick second. On both ends, you got so for the SPY and the QQQ, right, you got the 20 over 40. Terrence, Wagwan. So you got your 20 over 40 on both ends. That's cool. But the big issue on the day is whether or not the QQQ can make it over this value area low. That is the big issue on the day. So as you can see, the SPY is trading over the value area low, but your QQQ, ouch, ouch, hitting the head. All right, hitting its head on the value area low. So we're just gonna, I just wanted to close out the day with you guys, chill out, talk about what's going on in the market a little bit. All right. Where y'all at, man? Question of the day. Question of the day. Uh, have you ever used the anchored volume profile? Yes or no? Have you ever used the anchored volume profile? Yes or no? That is the question of the day. Audio going in and out. Hmm. Interesting. Is the volume going in and out for anybody else? Is my volume? No. Okay. I'm gonna take that as a Shay Breezy. What it do? Okay. So Anisha, make sure you don't have any other apps open. Make sure you don't have any other apps open, Anisha. What's going on? What's going on? What's up? What's up? What's up, Thea? Oh, we just opened up, Shay. We just opened up. We just opened up. You ain't missed nothing. You guys didn't miss anything. I literally just popped this thing open. So nope, you did not miss anything. Um, Question of the day. So here's the question of the day. Have you ever used the anchored volume profile? Yes or no? Have you ever used the anchored volume profile? Yes or no? Where my anchored volume profile people at? Okay, so Shay says yes, she has. Alicia, yes. All right. And of course, I'm going to assume all of my students the answer is yes. That's why they're not answering right now. They're like, they're like, I don't want to say yes. um, so for those that have never used the anchored volume profile, um, let's see. Let's see if I can. I'm going to pull some stuff up in a few seconds. All right. But it's a technical analysis tool that analyzes volume distribution at different price levels. But unlike traditional volume profiles, it allows traders to anchor the volume analysis to a specific point in time or price, enabling more focused analysis of volume activity within a particular range. I'm gonna play a video for you guys in a little bit, right? But that's what we're looking at here, right over here. This is your anchored volume profile right here. Where you know we'll do a how about we do a stream about the anchor volume profile, a little bit, maybe I'll think, matter of fact, Saturday was supposed to be our premiere stream, so maybe I'll talk anchored volume profile tomorrow, right? So maybe I'll talk anchored volume profile tomorrow. We're just doing, so all these streams right here are just test streams or just pickup streams in order to just get things rolling. But the real initial stream comes in tomorrow. Yeah, it's just bonus content, exactly, Terrence. It's just bonus content, right? Um, but we will go ahead and begin our initial stream tomorrow. So, what do y'all think? Is that a topic y'all want to go through? Y'all want to do anchor volume profile tomorrow? Is that going to be our first stream? Is our first stream going to be how to use the anchor volume profile, or y'all want something else? Put some requests in the chat. If the answer is yes to the anchor volume profile, then we could do that. We could do that. But if you have some other requests, put them in the chat. Let's see what other requests we got here. Right. Look at this now. You see this? Look what's happening in the market. Right. I'm on the 1 hour chart here. All right. I'm on the 1 hour chart here. Look at what's happening in the market right now. All right. We're having this like Terrence said, it's just some bonus content. It's just some bonus content. I'm just making sure everything works fine and stuff like that. Just making sure everything works fine. Just make sure we good to go. You know, getting right, getting ready, getting things flowing. You know, I I had to start an entirely new Twitch channel. So that way we can do the stock thing, and I didn't have to connect it to the video game thing. So this is just hey, let's see if we can get things rolling in the right direction. Is all it really is. So um but yeah, you can see how, so from the hourly, looks totally different from the hourly chart, right? Look at that. From the hourly chart, you got pretty much tweezer, you got tweezer tops here pretty much on the hourly. Yeah, it's the beta test. It's the beta test. Yeah, I like that. That's a good word for it. It's the beta test. You know. So yeah, from the hourly, you can see how much differently that looks than the 15 minute or the 30 minute. So that's why I went with the hourly chart here, because it's given a pretty good a pretty decent view of things. You can see, look at your SPY as well. Look at your SPY there. Pretty much breaking down back below that value area low as well. All right. So if we so yesterday, I wish I was on yesterday, because one of the things that I was talking, having a conversation with one of my students, and right here, hold on one second, guys. One second here. Yeah, I'm gonna log into my Twitch on my other phone, like maybe like later on today. But I'm definitely gonna do it before the next. I'm definitely gonna do it before the other stream comes about, so that way I can have my stream manager going. For right now, I am I'm watching the stream on my Colby to Answer account, so I can see when you guys are commenting for now. Um, because the OBS sits in the background of this, right? So usually I'd be able to like shrink the screen down and then put the OBS chat next to this, right? But it takes away from what you guys are able to see here, so I don't really like that. So I'm gonna go ahead and launch I'm gonna go ahead and launch Stream Manager on my other phone, so that way we can do it that way. All right, but as I was saying here, so we still have some key signs that things are, you know um not quite as bearish as they seem in the moment. You know, we still got some signs, like like the VIX. Really, this could potentially be the second close below 20 in as many days. Now we still need to see the VIX fall below 19, though. We still need to see the VIX fall below 19, nonetheless. All right, so unless we get that VIX below 19, no, we haven't really escaped the volatility yet, because above 19 is still above average, right? Remember that above 19 is still above average, as we were discussing before. I don't have those specific notes with me, but nonetheless, it's somewhere around 19. It's 19 and some change, but we'll just say below 19. That's where the low volatility side of things is, and you can see that also takes us below this 40-day average here in terms of the VIX. So we definitely have to do a little bit better, you know, in terms of getting below this particular mark, and then we can say we're back in some lower volatility times. Uh, but for now, I want to see how we, I think if I'm gonna go intraday from here, I'm probably gonna watch the 15 minute and see how this one pans out, as far as the value area low here, and just kind of watching from the trend perspective. Let's see. Yeah, I'll probably keep my eyes on that 15-minute chart. Um, so I'll probably do hourly and 15-minute is probably what we'll do. So this is going to take us into 330 from the hourly chart. So I'm going to take us into 330. Um, that's a tough close right there, after having some pretty decent performance over that past hour. It's a pretty tough close there for the SPY. For the QQQ, same thing. But notice how close these two averages are together. This is your 20 and your 40. See how close those two averages are together? So there's likely to be some type of an explosive move out of this point right here. Now that could be an explosion to the downside, come back to the lows of the day, or an explosion to the upside, a breakout to the upside, in which case, we'll probably test the highs of Thursday. Right. Now, if we don't test the highs of Thursday by the end of the day, if we don't test the highs of Thursday by the end of the day, um, it's gonna be some I want to say medium probability that we'll on Monday we'll be back at the lows of today. You know, so we'll see if we can at least push towards these highs. As opposed to hanging out down here in the market. Um, as far as the anchored volume profile is concerned, we're right in a high volume node right now, and I think pushing below this area and then rallying from there really did show that there was some level of some level of buying out there. Somebody's out there buying something at least. But the question is how much. And so Finviz, I took a look this morning, and earlier today we had above average volume going on. To close out the day here, we're back below average volume, right? See the relative volume right here on the right hand side, on the left hand side here, right? So we still got average volume happening on the Dow Jones, but everything else seems to be below average volume right now. So we could definitely do better in that regard as well. So if we happen to see that we pick up from here, we need to see some pickup in this volume as well. But I believe that this drop off in volume here could be a sign that this rally was just not it. That we could have some downside from here. All right, so this is what it is. Now, let's talk about some other things. Let's go back to the daily chart here. For those that are just joining us, what's up? What's good? What's good? What's up? What's up? What's good? Question of the day: have you ever used the anchored volume profile? Yes or no? Question of the day: have you ever used the anchored volume profile? Yes or no? So let's go back to the daily chart here. All right, so from what we can see right here, you if you were to see the market fall back to these lows, right, we're gonna have a divergence happening, meaning new lows in the market, but not a new low for the RSI. So you have a bit of a divergence there if we were to retest those lows. And the RSI is set to hit 30 around like 536 or something like that, right? So the RSI doesn't hit 30 until all the way down here. Okay. So what's going to happen in the market to bring us down here? If we break these lows, these most recent lows, totally get it, totally understand it. Uh, you know, we haven't actually seen any indication that what the reason for our sell-off is not still relevant. So, if we were to revisit these lows, I wouldn't be surprised. But You know, if we do have some buyers in this area, I wouldn't be surprised about that either. Just considering the fact that we're coming off of a correction, and we definitely traded below some key levels. Definitely traded below some key levels that definitely are correlated with discounts in the market, I guess you would say. You know, they think the market was pretty reasonably discounted at this point, and for now. Now, in the future, there could definitely be some better discounts to be had, but especially if you're talking about what's going on so far this year, value area high sitting up here, value area low down here. We're trading below that, so a lot of people might look at that as being a discounted. No, no, no. We already hit a correction. So the correction is just the amount that we were down. It's not the pattern itself, right? The pattern itself is not a correction, right? So just kind of keep that in mind. The pattern itself is not a correction. It's the it's the amount that you're up or down at any given moment. That's your correction. So when we 20% from the high is a bear market. That's a bear market. That's the type of stuff you see when you're going into a recession, or you're popping a bubble, or stuff like that. You don't drop 20% from the high just to correct prices. You drop 10% from the high to correct prices. You drop 20% from the high when you screwed up. You know. So just got to think about it from that perspective. So here we are again. The the SPY is back above the value area yet again. We're back above the value area yet again. Let's go to 15-minute. I meant to do that. All right. Back above the value area yet again. And the QQQ still no, right? Today we're just practicing our thought process around Dow theory a little bit, right? And we're going to put that in the chat. That's Dow theory, right? That's Dow theory. I do believe we did. Let's take a look. I'll measure it right now. Let's see. All right, so get our info line here. From the high to the low was 13.6%. We're now at 11.39%. When we were here, we were still in correction territory here. So that's still correction territory. So right here we were trying to break out of it. Right here. These points was us trying to break out of correction territory. All right. But today is options exploration. Now that's for the QQQ. Let's go to the SPY. Let's go to the SPY real quick here. Because in that moment I was talking about the SPY, the S&P. As you can see here, we only hit 10.36% on the SPY. So the SPY actually is out of correction territory right now. And at its best was only down about 7%. Right? So yeah, so the SPY is actually out of correction territory. The QQQ is not. Let's go check out the Russell. So what's going on over here? I mean, these guys, oh Lord, these guys are having a rough time. Let's take a look. Yeah, so we almost had a bear market on the we almost had a bear market for the Russell. All right. And I don't even need to measure. I don't even need to measure where we are right now. So we almost had a bear market here, and I think this right here, is a sign. Could potentially be a sign of things to come. Let's go from here. So, in order to have or say that we have an actual bounce back. So 236. So let's just say we need to get back above 240 at least in that area to say that we've started something new. So for now, bear market is the story for those guys. Just is what it is. Just is what it is. Still watching this crude oil. Still waiting to see what goes on here. Still waiting to see what happens over here. Give me 1 second, guys. 1 second. Alrighty, I'm just putting my headphones back on. They had died earlier, so I'm just gonna get them back on real quick. Let me get back right. Let me get back right. There we go. How's that? You guys got me? Y'all can hear me well? My mic isn't too loud, is it? That's a good question. Theta Sniper, shout out for the follow, man. Appreciate the follow, Theta Sniper. Shout out for the follow, man. Appreciate it. All right, excelente. Okay, so yeah, so we're well above the anchored volume profile. We're well above the area, the value area low again. For the SPY, and this is a pretty strong test again for the QQQ, but still just not there. Still not there. This is just what I wanted to check out with you guys today. Just want to really check and see if can we do it? Can we do it? Okay. Next question. Do y'all think we can get it done? Who thinks we can get it done? Who thinks we can get above this value area low for the QQQ? Put your votes in. Put your votes in. Put your votes in. Who thinks we can get above this value area for the QQQ? What do y'all think? Think we can get above that for the day? Who thinks we can get above that on the day? I mean, it's looking it's looking tough so far. The SPY keeps doing it. The QQQ isn't, and so we just keep pulling on back there. So every time we get above it for the SPY, the QQQ stalls out, and it seems like we pull. See, look what's happening right here. We keep pulling back down. All right. Terrence says no. Okay. Terrence says nah. He don't think it's happening. Let's go back. Let's go back to our 30 minutes here. See what we got going on. Let's see. Hmm. You know, so I want to create a few segments that we'll do together. Um, one of them is going to be obviously we'll do some study time. We'll do some study time. Matter of fact, I think Saturdays are going to be study time, study hall on Saturdays. We'll take that time out to do some study time, study hall over there. Then I wanna do like a stock analysis, more so like a report. And I think before we close out each session on Saturdays, I'll probably ask you guys, um, to come with the names of some stocks that you guys want to look at, and then over the weekend, I will I will take a look at those stocks for you guys, and on Monday, maybe on Monday, I'm thinking, or yeah, Monday or Tuesday, one of the two. I'll come back with the best, whoever called out the highest rated ones, right? Whoever called out the highest rated ones, I'll come back with the highest rated ones. Along with a few names that I'm looking at as well, right? But I think that's going to be a good one to look at. A good one to look into is just like give you guys an opportunity to call out some names that I can look at, and I'll come back and let you guys know what I found about each of them. I'll probably have like a little slide or something like that. Like this kind of happens on the screen. So on the screen it'll talk about the company or whatever. It's just kind of like a few notes on the company. All right. So yeah, tomorrow, come with your symbols tomorrow. Um, come with your symbols tomorrow. Just you gotta already know what you want to look at. All right. I'm gonna be asking at the beginning and at the end of the session. All right. At the beginning and the end of the session, I'm gonna take a list of names that you guys want to look at, and I'll review them over the weekend. Come back on Monday or Tuesday, and we'll go with that. So other than that, though, I definitely want to continue to do. We'll continue to do a few of these. So Fridays, I think I'm going to keep this, kind of closing out the day with you guys on Friday. All right. I think I'll keep doing that with you guys on Friday. All right. Just to kind of see where we're closing at and what do we think about things. As of right now, um, the way that things are struggling at the moment, I think it's okay if you want to pick up some short volatility, some S triple Qs or something like that. For Monday, it's not gonna hurt. You know, so just keep that in mind. If you want to do that, I wouldn't be opposed to that. I think that's a pretty decent idea. You know, it's not going to hurt you anyway because it's you got more longs than you got shorts, right? So it ain't like it's gonna hurt nothing, But that's definitely a way to go. Let's see. Let's take a look at some S triple Qs, and I'll let you guys know what I'm seeing here. Mm-mm. Because this is looking like a struggle right now, the QQQ just won't stay above that value area low, and the SPY is just being drugged down every single time. So let's see here. Hmm. Today's the 21st, which makes next week Friday the 28th. We don't need a ton of time here. Okay, we don't need a ton of time. So we're looking at about 5.8%. Um, based on the we're looking about a 5% move here, so about a 15% move in the S triple Q, I believe. So so that would be a long, so 30, we're about 37 bucks right now on the S triple Q. So 37 times, hmm, so that's about $42 strikes. You know, let's see here. Or you can just pick up some S triple Q shares, up to you. Now the question is, how high did the S triple Q go on the last time the market took a drop? Let's see. What was the highest it went? Let's go to the daily. It hit about 40. So if we were to break the lows, then 42 definitely isn't that far fetched. If you wanna put a little less in, then you can you know, put a little less in, you can go with spreads or something like that. Ain't nothing wrong with picking up a spread. Up to you how you want to handle it. But yeah, like I said, I might just pick up shares because you know, uh, it's a little less it's a little less volatile right now in the market. So we got some volatility dropping off. The VIX is still trading below. Still trading below 20 to close out the day or towards the close of the day. We're going into power hour. So let's see. Let's see what happens here first. That's what happens here first. I'm gonna chill out and wait until we get closer to the close. All right. Let's see what happens when we get closer to the close. That'll be you know easier to look at. Remember, most of the money's made when the markets close. You know. So when it's all said and done, I could be opening some of those positions at the close of today, and maybe taking my exit at the opening of the session on Monday. We shall see. All right, so let me grab this really quickly here. Give me 1 second here. Second here. Can y'all hear that? Can y'all hear this? Can y'all hear that? Can y'all hear that playing right now? Just making sure y'all can hear it. I just want to see what they were talking on Yahoo Finance real quick. All right. Okay, so we have on Monday retail sales and home builder confidence. Go back a bit. On Monday, sales and home builder confidence. On Tuesday, housing starts, building permits, import price index, and on Wednesday, we had the Fed decision. On Thursday, we had jobless claims and existing home sales. Nothing much happening today, obviously.
Averages here, kind of a muddle to end the week here, really struggling to maybe eke out some gains and not quite making it there for the Dow, at least not right now. It's down about 80 points, not even 0.2%. The S&P down about 1/3 of 1%, and the Nasdaq also kind of hugging the flat line here. I'm also looking at the weekly numbers here because it does look like we're going to have a rebound on the week, maybe here, at least that's how it's setting up right now, up 0.9% for the Dow. up very barely for the S&P. So that's going to be more of a photo finish, and the Nasdaq not quite making
It's also an interesting trade day, Julie, because it's a trade day full of big names and big names that reported and really have kind of underwhelmed across a wide range of industries. You had Micron, which we watch carefully, largest U.S. maker of memory chips. Those chips go into a lot of important end markets. They reported, they disappointed. Look at that, we're down about 8%. You had Nike, a read on the consumer, also reported. Investors there also very clearly underwhelmed.
Yeah.
You could take a look at Lennar, home builder, again, impressed. And finally, of course, you look at FedEx, considered by some, still an economic bellwether, right?
Yeah. There's
Investors
Nike.
unimpressed too.
And then I was going to call up FedEx as well. Looking at the Dow transports in particular, and what we're seeing here from FedEx is down by 6%. So you're right, a lot of this having to do with commentary. And one of the common threads between a lot of these is concern about the economy, concern about the consumer, concern about the effect of tariffs. Certainly that was all intertwined with what we heard from FedEx here. And Rick Patterson over at Loop Capital talking about that FedEx, if there is to be a recession, and he says, just to know this, not saying there's going to be, but that this is not a stock you want to own if indeed there is going to be that kind of economic downturn. And
you mentioned tariffs as well. We got more President Trump headlines today too, where he seemed to suggest maybe there would be some flexibility there, perhaps. Yes. And of course, we're watching that very carefully because that's all coming ahead of these reciprocal duties we expect early next month.
Yes, exactly. A lot of trepidation ahead of all of that.
Well, markets point to muted action after another volatile week on Wall Street. And our next guest says the economy's soft landing is what's really behind the weakness so far this year. Joining us now is Daniel Morris, BNP Asset Management Chief Market Strategist. And with us for the hour, of course, the one and only Corey Johnson, Epistrophe Capital Chief Market Strategist and host of the Drill Down podcast. Welcome to you both. Dan, start with you here on the markets. And I thought, Dan, your comments are interesting. You're looking at the market action this year, Dan. You say, in your opinion, this has really been much more about the macro. It's about the slowing growth more than the tariffs, Dan. Walk us through that, because I can't tell you that we have a lot of strategists on really the word so far we hear over and over again. Focus, the attention has been on tariffs. Why do you say that?
Well, I think that misses the point, and that's important because if you're not analyzing what's really going on in the market currently, I think you then miss what might come next. So think back to what we thought was going to be the outlook for 2025 before the election, and the word we kept repeating over and over, of course, was soft landing. So that meant growth was supposed to slow. Inflation then would come back down towards target, and then the Fed cuts rates, and we were going to all be quite happy. Now, we perhaps got a bit distracted by what happened subsequently with the election. Of course, the market started pricing in what it anticipated as pro-growth policies from Trump. But we got to remember there's a sequencing effect here. If that happens, it's not going to be right away. You need time for these things to filter through for the economy. The economy is going to continue doing essentially what it was going to do, and I think it's that soft landing that we anticipated. So from that point of view, we shouldn't be surprised. That's what we thought was going to happen. And I think fundamentally that's the key thing that's behind the market. Of course, tariffs come on top of that. But the key point, I think, is the soft landing.
But it is a softer landing than anticipated by many. I mean, you're looking at GDP forecasts that a lot of places are revising lower, and many are attributing that to the sort of survey data that we've gotten, the weakening sort of confidence in part.
Yeah, I guess I, again, kind of question the analysis that's going on there. So if we go back to the growth rate we had at the end of the last year, 2.8% if you look at core GDP. Well above trend. We expected that to go down, right? That's all part of that picture, towards 2-ish, let's say. So we're kind of going in that direction anyway. I think some of the numbers that you see in the calculations of the GDP now are a function of the surge in imports you had ahead of the tariff. So that does have a mathematical impact on the GDP calculation. But if a lot of those imports just end up in inventories, you more or less see an offset in the GDP calculation when the figures come out. So I still think we're looking at a two-handle for GDP.
This guy right here.
Predictions on
it's amazing how people want so badly to never give up on what they think is happening.
Like, and we see concerns about it.
Just that concern. You're hearing two audios.
To respond.
Conceivably, I mean, you always talk about the feedback loop. I just want to highlight one thing on the decrease in consumer sentiment, because if, to the degree that
I don't know why there. I unmuted for a second. I unmuted.
And one thing you certainly saw.
You should only hear one audio right now. You should only hear me, right?
Consumer confidence.
You can only hear me right now, right?
And both of those back then stayed quite high. What's been different this time is that business confidence has actually, despite tariffs, right, still quite high, but you've seen this drop in consumer confidence. And then if you just read the headlines, it's, oh, well, tariffs are dampening consumer confidence and so on. I kind of question that assumption.
All right, let's pause that real quick. How about now? Better? Is that better? Okay. So this guy, right? It's crazy how people like they just refuse to like, bro, just say what's going on and stop trying to gas it. All right, look, he just said towards 2%. We've seen the GDP projections. Shall we take a look at them? Let's go take a look. We've seen the GDP projections. He has still yet to acknowledge that GDP projections are falling into the negative. All right, GDP now. We're in the negative now, sir. We're in the negative now, sir. We're you know, what are we talking about? All right? And it's just amazing to me that these folks will literally just, and this is why you got to be careful. This is exactly what I was talking about yesterday. Because if we didn't know any better, we wouldn't even know that GDP projections are all the way down here, based on what he's saying. Now, I think he's right about one thing, and that's, you know, much of what's going on is more about the slowing economy than it is about the tariffs. I believe he's right about that part. I still believe the tariffs did most of the damage, right? But I believe the slowing growth really was a result of the tariffs. So you can't just factor those out. You can't just factor out tariffs and say, you know, there's nothing to it, you know. So that's just, I don't know what's going on with that, but this guy just he just threw me for a loop just now when he started trying to say that, you know, you know, that we were currently looking at projections around 2%. No, we are not. We're currently looking at projections around negative 2%. Let's get that right, sir. I still want to hear the rest of what he ended up saying. Just wanted to point that out. Now, were you guys hearing two audios before I unmuted or only after I unmuted? Question. Before or only after I unmuted? Well, let's try it again real quick. I'm gonna go back on mute. I want to hear the rest of what he had to say. I just had to pause. I just had to pause for that moment right there, just to make that very clear that GDP projections are negative 2%. So this guy right here is doing a bit much to try to, you know, pitch this continuation of a soft landing narrative. Let's keep going.
4 months, is an increase in headline inflation on a monthly basis. So people are saying when they go into the stores, gosh, prices are going up again. That made me really unhappy last year, and it's making me unhappy again. So I think that's, again, a key driver.
Dan, with all these cross currents, I'm just curious, have you made any kind of meaningful changes to your earnings outlook this year or held steady there?
Well, I think we pulled back because of this. You know, if you had that initial assumption of, hey, gangbusters, everything's going to be great, we were overweight U.S. equities, you know, honestly, I think like most people. But when we started to have some doubts about that outlook, we pulled back. We're kind of hugging, you know, neutral around now. We're in a transition period, which we appreciate. We're not quite sure what we're transitioning to be honest. So we want to wait, try to have a bit more clarity before reallocating. So neutral now, but anticipating to move back into equities at some point.
And Dan, as somebody who is based outside of the U.S., you're based in London. I'm especially curious to get your take on this emerging piling into European stocks, for example. I saw a chart today that Bloomberg's Joe Weisenthal put out where he looked at the ratio of U.S. stocks to the rest of the world using a couple of ETFs. And effectively, U.S. stocks have just dominated. They have been the place to be for so long now. And now we've got this little bit of a blip down in that ratio. Do you think there's some staying power here, or do you think that, the U.S. as the place to be is going to reassert itself?
Well, you see that if you just think about your benchmark allocations, take the MSCI World Index or All Country World, the U.S. is 65 to 75% of that index. And, you think about the other opportunities that are out there in the world. We've seen that now in Europe. We've seen that now also in China. So I think it's probably a healthy reallocation, because even if, in retrospect, honestly, I think the overweight that, again, most of us had immediately after the election was the right one, so to speak, or it made sense at the time. I think the healthy aspect of the markets today is, even if you might still think U.S. equities are going to outperform over the long run, you probably feel a bit better about the outlook for Europe, about the outlook for Japan, about the outlook for Europe, for China. So I think a bit more of a balanced perspective, and therefore, you should probably have a bit more of a balanced asset allocation.
Is it what the moves we're seeing right now about U.S. investors looking to Europe, or is it about Europeans keeping their money in Europe and saying maybe less U.S.?
Well, I'm not sure exactly on the data, but it would ideally be a bit of both. Now, of course, any country has home bias, and given the size of the U.S. market, you kind of wonder how many people really are going to be willing to look abroad. But again, from an asset allocation diversification point of view, probably a healthy thing.
Your expectations, Dan, for the Fed this year, what are you telling clients?
Well, this is interesting. If you look at Fed forecast for Fed funds at the end of this year, so we're now back down about around 350 the last time I checked. As it happens, that's more or less exactly where we were before the election, when we thought we were going to have a soft landing. So you had the big sell-off in expectations, thinking it was going to be more growth sooner. We're now kind of back to where we started. So I think that those two cuts or so, 350 or so, reflects, again, what I think is that soft landing outlook. No longer that risk of overheating that we had initially, but also very much not a recessionary forecast. So, if the data continues to come in line with that expectation, then it seems reasonable to me.
Dan, thanks for coming in.
Thank you.
It's good to see you in person.
Likewise.
All right, we want to bring you an update on the situation at London's Heathrow Airport. The first plane landing there a short time ago. The airport was closed for most of the day due to a power outage that delayed travel for hundreds of thousands of passengers. That outage caused by a fire at an electrical substation supplying the airport. About 120 aircraft were en route to Heathrow when the fire broke out. And the airport says it expects significant disruption for days.
A much-needed win for Boeing. The stock's securing a major contract from the U.S. government. We've got the details. That is straight ahead.
So it looks like it's kind of crazy that they segued into some kind of a win in the airline around airlines, because I was just about to say it seems like the airline industry just can't catch a win. But we kind of knew that anyway when we moved out of the Alaska Airlines, and I wonder how SkyWest is doing lately. For those that are not familiar with the conversation, some time ago we did some research, and we ended up realizing that there were only a few names worth investing in as far as airlines were concerned, and we went with a company by the name of SkyWest. As you can see from around here, the stock has pretty much quadrupled in price. At some point, more than quadrupling in price. If quadruple is by 4 in price, what's by 5? What's that number? Is that a double? What do you call that? Somebody help me out. What is that? What is that? What is that? What is it? What do you call 5xing? Help me out. where my vocab specialists at, you know? What do you call that? So you can double, you can triple, you can quadruple. What is times five? What is that? What is that? Does anybody know? I'm gonna make a list one of these days of all of them. So that way I know. But either way, yeah, it's at some point it's more than 5x here. Crazy numbers. Absolutely crazy numbers. Mm-mm-mm-mm. So that was a pretty decent one. Let's see how SkyWest is doing lately. We're trying to kill some time anyway. Let's see how SkyWest is doing. So stock analysis. Let's check them out. Mm, I wonder if they're let's see here. I wonder if their bats are looking good. They're certainly still buying back stock, I'll tell you that. Free cash flow yield 10.13%. Excelente. Analysts rating to buy. Earnings per share $7.77. And here you have it right here. You know. Uh Altman Z 1.58. F score is a 7, which shows that things are starting to improve a little bit. But look at that. Look at that. They could do a lot better. So yeah, they have a high free cash flow yield, but their debt to free cash flow is a 7.58, which says that they're so it's quintupled in price. Interesting. A quintuple. Nice. Thank you, Anisha. Huh. So they're operating. Their debt to EBITDA seems fine. Debt to free cash flow could be a lot better. Quick ratio, current ratio shows exactly what we're seeing from the Altman Z, which is that they got to do a little better there. Let's go trailing 12 months here. So remember, accounts receivables is rising. Right? Let's check the cash. Let's check the cash flow statement. Operating cash flow. Yep. See that? Look at that. So as accounts receivables rises, a lot of times, yeah, no, that was right. That was right. Um, that's exactly what I was asking. Um, exactly what I was asking. So yeah, but look at this, right? So as accounts receivables rises, a lot of times you have a negative shift in working capital, which ends up leading to a negative shift in operating cash flow right here. So let's go back to the balance sheet real quick. So you can see right here, our accounts receivable just keeps rising, right? cash has been, cash and short-term, investments has been pretty steady. But they look like they cashed out on some short-term investments recently, though. And they were short-term investments, so can't be mad at that. Yeah, other receivables are, all in all, increase across the board there. Not really gonna pay attention to inventory. Total current assets have been rising. We know a lot of that has to do with receivables. Now, in the airline industry, that's going to be a lot of people who maybe they booked some flights haven't because SkyWest work with the other airlines. So maybe some of these other airlines have SkyWest booked out for some time, but haven't paid for it yet. That's possible. So total current assets isn't really moving much. If you come down here, see your total current liabilities has definitely been on the move, right? You're adding about that's about $100 million. Um, you know, um, from here to here, that's about 100 million. From here to here, that's almost 200 million. Meanwhile, total current assets hasn't moved much. So shareholders' equity has been on the rise, so they are still managing to improve shareholder value in this regard, which is one of the reasons we did like them, you know. But they got to do better. They got to do better than this, you know. Let's see. So $7.77 in earnings, $9 in free cash flow. Excellent. Not enough return on capital or return on invested capital, but we're still above 5% here, so we're not worried per se. And one of these days, I got to do like a average interest on You know what? Yeah, well, I'm gonna do an average interest on speculative grade debt. That's probably what I'm gonna end up doing. You know, and I'll probably be looking like for this return to be a little bit higher than that. Later on, I'll probably do some of that digging right there. Mm, 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 mm. Let's go over here real quick. Trailing 12 months, earnings are up 794%. That's crazy. SkyWest is still, they can still surprise you by doing some things. Uh, yeah, they're projected to have double-digit growth over the next 5 years, but they're projected to have a slowdown in earnings, this year, over the next year, right? So there's that. There is that. Um, hmm. Their target is 128 bucks. They're trading at about 90. Seems like a reasonable discount there. But but you got a lot going on here that's just not, and you only had a 20% increase in sales. So, this tells me that This growth right here was probably due to something else, you know. It definitely didn't come from an increase in business. It's probably like a recovery from a you know from a down period. Yeah, I didn't know y'all can click on the target price, did y'all? Yeah, y'all didn't know that, did you? Hmm. See the earnings surprise? Yeah, earnings forecast meant the same. Steadily rising. Hmm. Yeah, see right here. This is what I'm talking about right here. So this is probably them flying for other airlines right here. Um, well, you know, a large part of their revenue taking on flights from other airlines. I'm gonna see what the earnings. So they're 8 for 8 out for their last eight. For their last eight. Um, earnings reports. They're 8 for 8. On earnings, 77%, 88% on revenue. They're not, you know, they didn't do bad. They didn't do bad, you know. Let's go back over here real quick though. Let's see what's happening. What's going on with Trading View right now? Oh, there it is. Oh, it was just coming up as I was closing it. There it is. Huh. Yep, still not there. Still not there. What Trading View got going on today, man? I don't know what's going on with Trading View. Everything else is working fine. Let's see here. Everything else is working fine. I don't know what's going on with I don't know. Trading views. I don't know what's going on with these guys. Oh, there we go. There we go. Can I get an anchor volume profile though? Not bringing up the profile. Volume profile. I don't know why. Oh, there it is. There we go. Now you act like you got some common sense, trading view. Can I get a 30-minute chart? Thank you. Thank you. Thank you very much. Thank you. Hmm. Yeah, so still unable to do it. Still unable to do it. Final 30 minutes of the day. Split it into two. This is actually pretty interesting to see. See that curving higher right there? Of the moving average on the 15-minute? It's actually pretty interesting to see. Hmm. So the question is, are we gonna have like a crossover here to close out the day on the shorter time frame? Maybe open higher on the longer time frame. Now, you got your high end sitting right around here, your low end sitting right around here. So whichever one of those areas, whichever one of those levels that we break first, that's gonna be the one. We break that level to the downside first. I see more downside. Break the level to the upside. I see more upside. That's what ends up happening. So looks like they're gonna take us down to the wire. It's looking like. But we can see here, we had more, you know, more candles pointing downward than upward here, and in the long run, but we are still trading above our, key levels. So support has been holding, but so has resistance. So we literally have no choice but to wait and see. Now I still got my long positions open, you know. Is what it is. I have not opened up any new shorts yet. Not ready to ladder back into shorts just yet. The market's got to give a decent recovery to start laddering back into shorts. Now, if I'm being honest, this this move right here, slight move to the upside, I brought us closer to this 20 MA right here. I'm not gonna lie. Uh, that is enough of a move to say you had a retracement. You know, and again, I say that knowing I have some short positions open. But I guess what I expect is for some of this downside, if it's still there, to be a little more or less short lived. You gotta ask yourself this question right here. Here's a question to ask yourself. The big boys, the big players. Um, you think they're ready to keep selling Nvidia stock from here just yet? Um, potentially yes. Potentially yes. But I mean, you could say that people had all the way until October, all the way since October, maybe even all the way back since June, since the split happened, to start getting rid of some of that Nvidia stock, right? You could argue that they gave you enough time. That's usually what happens in a lot of these downturns. A lot of these downturns, you get you know, a lot of these downturns, you get people not wanting to come to grips, come to the realization that you know that the market is in fact about to have a major downturn. So they continue to hold on to what they got and not really not really make any preparations. Now what were we doing up here? We were cashing out. We were taking profits, right? Taking profits, cashing out, getting ourselves ready for potential, downturn. Picked up some shorts, got ourselves right. And well, we got this so far. So far. Little 10% move. Nothing much. Had you I think that was like a what do we say, 13% move for the Nasdaq. I can't remember how much that one was. I think it was about 13%, somewhere between 13 to 16%. You had a like a 0.5% off of a bear market in the small caps. So the question really is, is there is there anything left in the tank right now? I guess we'll find out soon enough. I'm gonna stay on until the close. We're just gonna watch and see how this thing closes out. Let's keep watching. Look at the difference between a 15-minute there. The SPY and the Qs. I'm gonna watch the Qs into the close. All right, new candle. Let's see what we can do. New candle. Now, it's not looking too good for closing um above the value area low here. But that little crossover we were talking about just happened. If you take a close look over here, right here, take a close look, you'll see that your 20 MA is now above your 40. This is about to be the longest 15 minutes of our lives. This is about to be the longest 15 minutes we've ever, 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 ever. Just a sitting and a waiting, Anisha. Just a sitting and a waiting. But hey, it's pushing though. It's pushing a little bit. A little bit. Anisha, I'm gonna assume you like the emotes on here better than on Clubhouse. That's my assumption. But you ain't got. I bet you ain't got this one. Bet you ain't got that one, Anisha. Yeah. Bet you ain't got that one. That's a special emote. Where you gonna get it from? Matter of fact, well, now you can get it because since I posted it, I think you should be able to get it from the post. I think so. By the way, oh, look at there it is. There it is. There it is. Well, for now. Oh, you have to put it. I think you have to put it like this. I think you have to put it like this. I think you have to put it in like. Let me see. I'm checking right now. Yep, you have to put a what you call it in front of it. Oh, hold on. You have to put it like that, Anisha. Put the little colon in front of it, like this. You'll see it pop up. So put colon heavy H1, basically. And then you see it pop up. Then you can just click on it. You have to click on it. And then, you know, you have to click on the, when you see it pop up, you have to click on the actual emote. Click on the actual emote itself. And then it'll come into your thing to post it. So put colon heavy H1, and then you're going to see it pop up. Click on the actual emote first. Alrighty. It's happening. See what's going on over here? Yep, SPY is obviously back above. Still nothing for the QQQ. Now, for the record, as long as the QQQ joins it, you're fine. It's just if it doesn't close above it today, we got no confirmation. That's really all it is. Anisha, you gave up. You had it. All you had to do is click on the little once you type it in. All you had to do is click on it. Click on it. End of the day, push above the value area low. Dun, da, da, da. That's what I'm talking about. That's what I'm talking about. I guess it's not working for you, huh? My Lord. Yeah. That is a that is a tier one sub badge, Anisha. That's a tier one sub badge right there. You feel me? No, that was gonna be if I was using if I did end up using Kobe to answer. Um, you know. Oh my, hold on. Let me go ahead and post this thing real quick. Let's see here. Copy image. Alrighty, all right. Y'all hear me typing? Ah, nice. A lovely day. Lovely day. What if I busted out with one of them you know 15-second days he was running, Anisha. Day. my bo- my boy my boy was doing 15-second days. Like my boy, you ain't gotta sing it that long, bro. Alright. You don't have to sing it that long, my guy. Yeah, I ain't gonna hurt him. I ain't gonna hurt him. I ain't gonna hurt him. You know what I'm saying? I'm saving that for my for my opera debut, Saving that for my opera debut. I plan on stepping out on a few things, I gotta go big stepping on Broadway, what I'm talking about. I feel like Broadway's been waiting for me, I feel like they've been waiting for me. I feel like they want me to, well, so you telling me I can't go to? You telling me my Broadway hopes and dreams are out of the question. Is that what you're trying to tell me? Hmm. All right, bet. Don't worry. One of these days, I'm gonna show y'all what's up. You know what I was thinking? Hmm. Huh. Let me see something real quick. Let me see if yeah. Tell me about it. Um. That is a nice close, isn't it? That is a nice close. So we got some probability for some upside on Monday. You know. Um. Got some probabilities. This was a decent close to the week. We will take it. Matter of fact, hold up. Hold up. Hold up. Wait a minute. Boom. Ah, you know. Nah, you got that. That's a bootleg. That's a bootleg right there, Anisha. That's a bootleg. That is a bootleg. You know. You see that? You see what that look like right there? You see that? That's the real deal right there. That is the real deal. All right, no, but seriously though, how about in that last 60 seconds? How about in that last 60 seconds? I went and grabbed myself some uh if you stand by it, then you'll be looking like Lisa Leslie, because that's a really small, real small icon right there. You're looking real big next to that. Um, but so how about in the last 60 seconds? So this was after it hit 359. I was able to go in and I went in and I cashed out on some I went in and I cashed out on some bonds for Monday. Went in and cashed out on some bonds for Monday. In the event I need the liquidity, you know what I'm saying? In the event. Your fingers gotta be quick. You know what I'm saying? Gotta be quick with them fingers. Yeah, so I keep a lot of cash in bonds. I keep a lot of cash in bonds. So I said, you know what? Let me put some extra cash in there. Um, in the event I need some liquidity on Monday, because we'll see. We'll see what goes on. But this was a good close to the week. Now this is gonna be the key level I'm watching for Monday. Let's go over here. Um, for the SPY, it's gonna be like 468 ish. Key level I'm watching for Monday. So yeah, we still got a lot to do here. You know, 475 is still my next target. That has not changed. Still my next target. That has not changed. I'm waiting. I'm waiting for that to come to fruition, and then and only then am I willing to hold any. I'm not willing to hold any short positions below 475 right now. I'm 575 right now. All right. So when we get around this area, I'll be willing to have you know, a short position or two. You know, um, y'all wanna do our key levels early? Let's do our key levels a little early. Let's talk about it. Let's talk about it. Now, yeah, I'm actually going to use the pivot calculator today. That's right. We're going pivot calculator on them. Okay. Weekly chart. By the way, SPY broke their losing streak today. I gotta go check on the gotta go check on the Nasdaq. I'm not sure about that. Matter of fact, I might as well just. Yep, got it. Okay. All right. So we broke the losing streak today after 4 straight weeks of downside. We have finally, finally, finally got us a gain. And 570.95. What? I'm just, just saying, it took a while. Took a while, but finally, we are in the building, right? Can't hold us down forever, all right? We don't deal with the glass ceiling, 564.17 is where we close. Yeah, that's a pretty you know that's a pretty decent close off of the low, I would say. Pretty decent close off of the low. Important to understand though that this is an indecisive type of close here. So hey, just keep in mind that we could just boom, you know, we could just open here, close here anyway. And we only have let's go to my calendar real quick. Uh, we have 6 more trading days left in the year. I mean, in the month. I meant to say 6 more trading days left in the month. So we have essentially we have 6 days to make it back above this price. We have 6 days to make it back above the 40 MA. I repeat, we have 6 days. 6 days to make it back above the 40 MA. All right. If we cannot make it back above the 40 period moving average, we got problems. We've got problems. You know what? You know what'd be nice? Imagine if I could imagine if right here on the screen, right, like right around here, this area right here, we'd have this. Imagine if I could drop a Bloomberg stream right here. Wouldn't that be cool? Right here where this is at. Imagine if I could have like on the live feed. I meant to say like so. Imagine if there's a Bloomberg feed right here or something like that. I might put my social media feed right there. I might do it. Something like that, you know. Like, you know, I publish all that stuff from Twitter all the time. Yeah, I wonder. I wonder if we could do it. I'm gonna look into it because there's a right like the stock ticker tape, Terrence, so something like that, you know. But it'd be like a third party thing. It'll just be an overlay. It'd be an overlay at the bottom of the screen, Terrence. It'd be an overlay. You feeling me? Huh. Stock overlay for Twitch. I'm gonna look into it, guys. I got y'all. I got you. I got you. You know. All right. So let's grab our levels. Let's do this. Yeah. No, I know I can do it. I just don't know if I can do it. I know. Let me rephrase that. I know it can be done. I just don't know if I can do it. You know, I still gotta get back into shape. You know, like I haven't done this in a long time, bro. I haven't done this in a long time. I haven't done any. So basically, you set up a channel, and you don't really set up a channel for a very long time after that. So, you know, I had to watch tutorials to get back to this, to where we are now. Uh, Alrighty, all right. Really, really, really. There we go. Okay. So this is the spy. Yeah, I had to relearn everything, Terrence. Everything, bro. Like I was lost, man. I was staring at my Twitch channel, like, let me see. Where's that? Hold on. Where's that emoji at? Where that emoji at? Hold on. This was me. This was me looking at my this was me looking at my Twitch channel. I I was toast, man. Peanut butter toast at that. So R1, I mean R3, I meant to say. 583.66. S3. 544.90. So peep this. So peep this, guys. Our R3 has moved higher our S3 has moved higher by what looks to be about $13. About $13. So that's a nice bump higher. But our S3 moved lower a little bit. So it shows that we have a little bit of a contraction. So remember we talked about that volatility contraction is going to start happening. It's starting to happen now. All right. So let's go ahead and punch in our numbers. 583.66, 544.90. All right, there it is. Look at that. This actually supports a lot what I was thinking here, which is so for starters, if we break this low, right here, it's highly probable we're gonna get a divergence. highly probable we're getting a divergence. All right. As you can see, there's no way we break this low and hit 30 on the RSI. It's just not going to happen. They're at Nisha put them in the chat, Terrence. You see them? 583.66, 544.90. Let me go and bring them up as well. Plug these numbers right here into your Fibonacci retracements if you want to have an easy trading week next week, as far as knowing where your key levels are. All right, plug them on in. All right. I was having a conversation with one of my students today. Something that a lot of people don't realize, right? Something that a lot of people don't realize. When it comes down to Fibonacci's, they're a measuring tool. They are a measuring tool. Okay? They're meant to measure the trend or the range that you're looking at and give you all of the likely support and resistance in between that. So if you're a pivot point person, you take your pivot points, you put them into your Fibonacci's, and you measure the range between the two pivot points. It's that simple. Because this is a pivot high. This is a pivot low anyway. So guess what you were doing anyway? You were already putting, and Anisha Terrace, that's something that I don't think I ever voiced to you guys so you can understand that. You were putting pivots into your Fibonacci's anyway by selecting, right, these different points. You were putting pivots in there anyway. And that's what helped me realize, like, yo, like, if I'm putting pivots in there anyway, that means I can put any pivots in there. That means I can put these pivots in there. Okay? Let's get our, so those are our SPY numbers. All right, let's get our, hold on one second, guys. I just thought about something. Interesting. Just thought about something. Sorry about that. Yeah, I wanted to go ahead and I just thought about it. I just thought about it. I never actually put the $20 from the 10% hedge. Uh, huh. Make sure you put that one's for the SPY. I'm gonna give you guys the ones for the for the QQQ right now. Terrence, you said $20 from the 10% hedge. Hmm. You mean from being wait, what does he mean? Hmm. I don't know what you mean by that one, Terrence. $20 from the 10% hedge. Are you talking about the original one that we put in? Or the one that we were talking about this Sunday? You talking about that one? Oh, gotcha. Yeah, yeah. That was from this Sunday. We were talking about that this Sunday. That's what that was. Yeah, we still got a good ways to go there for sure. Let me see here now. So let's go ahead and plug in our. Let's go ahead and plug in our SPY QQQ numbers for the week ahead. Ready? All right. So the high 485.84, the low 472.41, the close of 480.84, and voila. By the way, I am currently on Omni Calculator. I'm using it on my phone right now, though, just so it could be easier. All right. R3 500.41, S3 460.12. All right. So these are the key levels going into next week for the Nasdaq, for the QQQ. All right. So, as you can see here, if we open above where we are right now, that should be considered a bullish open. Right? If we do open above where we are right now, that should be considered a bullish open. If we open slightly above where we close at today for the Q for the SPY, but for the QQQ, that was a nice solid close. If we open above where we closed at, or even at where we closed at, that should be considered a bullish open for the week. And and a good start. Um, we have been trading the SPY more often. All right. So as of right now, we're still looking for a move close to the five. Oh, look at that. Look at this. 575. That was a 78.6% retracement. We got we got 6 more days left in the 6 more trading days left in the month of March. From an index perspective, that gives us 6 days. 6 days to let's go ahead and we can move this out of the way for now. All right, it gives us 6 days to push back above this 40 MA here, which is our that's our 200-day moving average right there, right? So we have about 6 days to push back above there. So and in reality, that gives us 1 week. In reality, that gives us 1 week. That gives us so next week we want to be closing probably above 580-ish, or the you know, the market can consider themselves on break for 30 days, basically, you know, whatever comes out of that, I'd probably just, hold some in this particular case, I'd probably hold some hedge positions. I wouldn't really make any directional bets to the upside if we can't close back above the 200-day moving average by the end of March. Plain and simple. Plain and simple. As a matter of fact, I got that video here for y'all. Y'all want to see it? Y'all want to watch the video? Y'all want to watch it? Let's see here. Um, Drop one of these emotes if you actually want to watch the video. Nah, Nish, you gotta drop one of these emotes if you actually want to watch the video. Drop one of those emotes if you want to watch the video. Get him. Nope, not working there, Genia. uh, I got the video for the moving average thing. I'm gonna show it to y'all though. I got y'all. I'm just messing with y'all. I got y'all. I got y'all, man. All right, here we go. D stands for dividends, huh? Christopher, is that you? D stands for dividends. Is that you, Christopher?
I made over 6 figures trading without even looking at the charts, without spending hours glued to the screen, and without relying on someone else to give me an alert, a trading signal, or having to join a Discord group. So what did I do instead? I followed a set of mechanical rules, a strategy that allowed me to minimize my losses and maximize my earnings while
Nope. Shut up, sir. By the way, if y'all don't know that trick, that's the easiest trick right there. If they give you an unskippable ad on YouTube, refresh the page, and unskippable ad goes away. Okay. So, you guys are watching this video for the 200-day moving average. Don't worry about all the other ones, okay? I'm gonna put my microphone on mute, and I'm gonna play this thing, and we're gonna come back and talk about it from here.
To all subscribers, welcome back. And for those new to the channel, please consider subscribing, and for those that find value, please hit the like button. Today we look at the book 5 Moving Average Signals That Beat Buy and Hold. We take a ride through the research and back-tested results using the 20, 50, 100, 200 and 250-day moving averages, including crossover combinations. The book demonstrates that by using a systematic approach, you will know when to be in the market or when to get out of the market and cash in before a market downturn. The question is posed, can you beat buy and hold? The efficient market hypothesis would have you believe that all known data is reflected in current asset prices, and it is therefore impossible to beat the market. Conversely, traders like myself and other gurus covered on this channel know the market can be beaten, and the moving average indicator is just one of the tools we can use to do it. The book uses the S&P 500 or SPY ETF as the benchmark when comparing the moving averages. The first to be covered is the 200-day moving average, described as the most popular and used by the likes of market wizard Paul Tudor Jones. In this study, we use daily stock prices and the crossing of the 200-day moving average to determine our position. The back-tested results are produced from the year 2000 through to 2016 and capture bull, bear, and sideways moving markets. A signal should only be acted upon once per month, at the end of each month. Therefore, a maximum of 12 trades could be generated per year. To enter a long position, we need to see price cross above the 200-day moving average, which we see here, although we need to wait until the end of the month to confirm and place a trade. The end of the month approaches, and we confirm our long position and enter a trade. We then sit and wait out the whole month to determine our next trade decision. Notice how price could drop below the 200-day moving average but remain above it at the end of the month. In this situation, we would hold on to our long position and therefore leave the trade alone. If the price continued and closed below the 200-day moving average at the end of the next month, we would sell our position and remain in cash, whilst waiting for the end of the next month to see if price crossed and remained above the 200-day moving average, at which point we would re-enter a long position. The back-tested results of this simple moving average index tracking strategy against a buy and hold strategy are remarkable. If we bought the S&P 500 index in 2000 and simply held it until 2016, we would have seen a total gain of 125.2%, accompanied by a maximum drawdown of 55.2%. If, however, we followed the 200-day moving average strategy over the same period, we would have seen a return of 317.7%, with a maximum drawdown of just 17.3%. In effect, tripling the returns of buy and hold, whilst reducing the drawdowns by more than 2/3. In essence, a rather simple, but effective trend-following strategy. Next we have the 250-day moving average, using the same S&P 500 index as the benchmark. The signal to buy for this strategy is when price crosses and closes above the 250-day average, and unlike the previous strategy, we do not wait for the end of the month, we wait for the close of the day instead. Once the trade is entered, we watch the price either continue its trajectory or cross back below the moving average line. If at the end of any given day price closes below the line, we close our position. Due to the requirement of reacting to daily price movement, there is the possibility of creating multiple false signals, unlike the previous strategy, which required a reaction only once per month. There are, however, pros and cons to reacting faster. Clearly, numerous false signals add to our trading costs, but these are often compensated by the reducing impact of a significant drawdown. Ultimately, using a moving average, we can skew the asymmetric risk versus reward into our favour by minimizing risk and allowing for multiple reward, arguably the most important metric in any form of trading or investing. Let us look at the results of this strategy against buy and hold over the same 16-year period. The S&P 500 index achieved a buy and hold return of 127.4%, and the maximum drawdown over the same period was 55.2%. The 250-day moving average strategy returned marginally more than buy and hold, achieving 128%, although the maximum drawdown was cut by more than half, at 23.1%. In theory, this strategy works best in a trending bull market, but perhaps more importantly, in a declining market or even a crash, it helps reduce risk. Before we move on, could I please ask you to hit the like button, subscribe, and even comment below? It really does help the channel. Next, we have a moving average crossover system, using the 50-day moving average and the 200-day moving average, also known as the gold and death crosses. The trigger to enter a position is determined by the direction of the crossover. For example, if the 50-day moving average crossed below and closed under the 200-day moving average, we would want to be in a cash-only position. If the 50-day moving average crossed above the 200-day moving average, we move from a cash position and buy the index. Unlike the previous examples, this system relies on the moving average lines only and not the daily price action. Using the same time horizon as before, we can compare buy and hold with this simple 50 and 200-day crossover strategy. From the point of the first crossover signal, buy and hold returned a gain of 167%, with a maximum drawdown of 55.2%. Using the crossover system, we would have generated a 205% return, with a maximum drawdown of 19.2%, considerably less risk than buy and hold. Here we have another popular crossover system, this time using the 20-day and the 200-day moving averages. The same principle as the previous strategy, but with faster buy and sell signal generation. Once again, let us compare buy and hold over the same time frame against this crossover signal. Since the first crossover signal was generated, buy and hold provided a return of 161%, with a maximum drawdown of 55.2%. The simple crossover strategy provided a return of 193%, with a maximum drawdown of 17.3%. Again, considerably less risk than a buy and hold strategy alone. Before we check how each system reacted to the 2020 pandemic crash, we look at our final crossover system, this time using the 50-day and the 100-day moving averages. The returns of buy and hold from the point of the first crossover signal accrued to 104%. The maximum drawdown was once again 55.2%. The crossover system achieved a return of 127%, against a maximum drawdown of 19.4%. Again, continuing the theme of minimizing risk. We can summarize each of the moving average systems here. The best excessive return over a buy and hold strategy was the simple 200-day moving average with an excess return of 192% and a maximum drawdown of 17.3%, making this the most appealing strategy of them all. But how would they have reacted 4 years later, during the 2020 pandemic crash? A buy and hold strategy would have seen a drawdown from peak to trough of 34% between the end of February to the end of March. The slowest strategy to react was the 50 and 200-day crossover strategy, enduring the full 34% drawdown. Next, the 50 and 100-day crossover with a 32.5% drawdown. The 20 and 200-day crossover with a 29% drawdown, whilst both the 200 and 250-day moving average strategies endured just a 12.4% drawdown, perhaps reinforcing the 200-day moving average strategy as the most appealing. The author Steve Burns summarizes the analysis by saying, "The purpose of these systems is to give entry signals that get you into uptrends and out before strong downtrends. The evidence certainly reinforces his theory and answers the initial question of, can you beat buy and hold?" Hopefully, this review has given you food for thought regarding either investing into an ETF or simply helping to time your individual trades. Once again, thanks for watching, and if you have not already, please consider subscribing and join our community. The analysis by saying, "The purpose of these systems is to give entry signals that get you into uptrends and out before strong downtrends. The evidence certainly reinforces his theory and answers the initial question of, can you beat buy and hold?" Hopefully, this review has given you food for thought regarding either investing into an ETF or simply helping to.
All right. So that's the index tracking strategy I'm always telling you guys about. That's actually called index tracking. That's what it's called. I don't think he said that in that video. But that's what it's called. It's called index tracking. For those that that don't know. And but by my knowledge, it works. So you see how every year I take a look at that January barometer. this is very similar to that. Like for me, it's very similar to that. I look at it in the same type of way. That I want to really just follow it as it should be followed, and and go from there. You see what the January barometer did for us this year, right? Told us keep it cautious. We kept it cautious, right? And that paid off big time, you know. But anyway, I am going to lock in I am going to lock in a session maybe a little bit later on Clubhouse. All right. So, you know, look out for that. I might tap in over there for a little bit. Okay. Um, but other than that, I'm gonna go ahead and chill out for a little bit. Enjoy some downtime. If I do a session if I do a session on Clubhouse, yeah, tomorrow still is still the inaugural Twitch stream tomorrow. Christopher, we're gonna be talking about the anchored volume profile. Okay, so the inaugural stream is still tomorrow. We'll be talking about the anchored volume profile, how to use it, all that good stuff. All right. So yeah, if I do pop onto Clubhouse later on today, it'll be a later session, like around be a later session like around 8:30. All right, guys. So and for those that are watching right now that are not a part of our Clubhouse community, you can find us on Clubhouse, the Equity channel, as you see here. Feel free to slide on through. Everybody be blessed, stay well. I'll talk to y'all soon. Laters.